we're in this, I think, this last push to the upside in precious metals, but the question is, where is the peak? And when things go parabolic and have these bubble phases and the whole world moves in, you don't really know where that peak is going to be, but the next critical upside target or major target is $106 an ounce for silver, which is pretty exciting. Not much has changed from our last monthly view of gold. The same targets, the same everything is still presenting itself, where this big run up and push is still pointing to that $5,100, $5,200 per ounce level for gold, which at the current price, that's about a 15% move from where we are right now. All of my analysis has been pointing to a major cycle coming to an end. The question is, when does it actually stall and roll over? This could be the year that things really turn around. And the whole pop and rally in precious metals, to me, is one of the biggest warning signs.
Gold and silver are officially in a screaming bull market, with silver recently smashing through all-time highs above $90. As global demand surges and the US dollar faces pressure, a historic parabolic phase is unfolding, potentially catapulting silver toward $100 and gold toward $5,200 per ounce in just weeks. In this video, ChrisVermeulen, Chief Market Strategist at thetechnicaltraders.com, breaks down his proprietary BAN, Best Asset Now strategy. He explains why the resource space is on fire, while stocks remain dormant, and reveals why current market volatility is actually a massive warning sign for what's coming next. But is this the final blow-off top before a major cycle ends? Watch to find out. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
There's a lot going on, but there's no doubt the best asset right now is the silver, for more or less the silver ETF or the price of silver. We've seen silver skyrocket higher based on our BAN, which is our best asset now strategy. As you mentioned, we had a new trigger in silver, in SLV. And of course, we're seeing this thing rip to the upside, just screaming, breaking out as you and I are speaking today. And I mean, this is a high momentum move. Really, metals is where all the money is flowing. The stock market has been dormant and chopping sideways for a couple of months, not really getting a lot of traction. And so all the focus has been on metals. And pretty much, if you look at our hot list here on the left-hand side, silver's number one, copper's number two, silver miners, then base metal miners and GDX, lithium. So we definitely have, the resource space is on fire. It's breaking out. We got massive volatility in silver, which it's a bit of a warning sign. I'm going to flip over to the futures chart here, the daily chart of silver. And this type of volatility that we're seeing over the past, week and a half is pretty extreme. When we have these 10 to 12% back and forth days, that is a sign that a lot of people are moving in. There's big bouts of buying and selling, and volatility tells us that something big is about to happen. Now, usually when we see elevated volume and volatility, it usually means a turning point is coming. But at this point, we're still in a high momentum phase to the upside. All the moving averages are sloping upwards. And this is a high momentum move. We could actually see silver have a very big move based on the Fibonacci theory. We have a huge upside target in silver based on this rally that points to roughly $106 an ounce if this was to pop and explode. And that means we could actually see this happen within really just a couple of weeks. I think we were in this very close to this parabolic phase in the stock market where we start to see things really take off and rally. And as you and I have kind of shared before, when we look at the type of price action, I believe gold and silver are obviously in a screaming bull market, but I do think we're coming into this market euphoric phase. I think we're going to see one big push where silver goes from where it is right now, potentially busts through that $100 per ounce mark. Gold probably flies up to 51, 52. Who knows where the peak is, but we're definitely in this territory where volatility is here. We could have 10% moves easily on a daily basis. And, this is where all the money is really focused. It's not just like North America, kind of like miners are more of a speculative play. It is somewhat of a focused group of investors. Precious metals, as I've been mentioning on here, you and I have talked about it for many months. I like physical metals better because they're not part of the stock market and they're more global. We're seeing the whole world participate in precious metals, and of course, it's such a tiny asset market size, so it moves very easily. So we're in this, I think, this last push to the upside in precious metals. But the question is, where is the peak? And when things go parabolic and have these bubble phases and the whole world moves in, you don't really know where that peak is going to be. But the next critical upside target or major target is $106 an ounce for silver, which is pretty exciting. Not much has changed from our last monthly view of gold. The same targets, the same everything is still presenting itself, where this big run up and push is still pointing to that $5,200 per ounce level for gold, which at the current price, that's about a 15% move from where we are right now. So the big picture hasn't changed. And I think that's the key, is you got to stick with the underlying longer term trend if you're an investor and you don't want to get shaken out. There's been some pretty big volatility, some pretty big down days in gold, but it's really most of these moves have been news driven. Obviously, we've seen the margin requirements change on silver a couple of times. That created a bout of selling in the precious metal space, which so many people, argue that markets are manipulated and, they're getting hammered down. But really, to me, it's a margin call, margin requirement. If margins go up, there's going to be a bunch of margin calls. It's going to force a bunch of people to have to sell, and that drives the price down. And of course, usually, we saw it across the board in gold and platinum and palladium. And, whoever's long silver, for example, probably has gold, probably has platinum or palladium, or a good group of them. And so they have to liquidate, trim their portfolios and raise cash to meet margin requirements. So these sharp pullbacks are nothing more than just a news driven event you could say, is trying to shake the market out, but really, the COMEX trying to balance things and try and keep some margin and investors a little bit protected, if the SEC or the governments really actually are there to protect the people. But anyway, gold is definitely still pointing to higher pricing, and I think it's going to continue to grind higher. And I think it's just a matter of time before it picks up speed and hits all-time highs again. And then we start to, I think this next run could be very, very exciting. 5,200 is the next target, but who knows where the peak could be. We could see this, go dramatically higher. It's just a matter of how things unfold. And I just measure the markets one wave, one move at a time. A lot of people will start stacking up, a 200% move or 300% move based on Fibonacci or other patterns. I don't do that because they're not very accurate. I like to just go one leg at a time, and you stay invested because you follow the underlying trend. And that's kind of what I think most precious metal investors do. They buy and they hold it and they stick with the underlying trend here.
In the next segment, Chris dives into the legendary Samuel Benner cycle, a 150-year-old roadmap that has accurately flagged major market turning points, like the 2000 tech bubble and the 2008 crash. He reveals why this cycle identifies 2026 as a massive cycle high, potentially signaling a multi-year period of weakness lasting until 2032. Chris also breaks down the January Barometer, the high probability rule that the first month of the year dictates the S&P 500's entire trajectory. Are you prepared for a Stage 3 market rollover? Let's hear directly from ChrisVermeulen.
But 2026, I think we're going to see the equities market put in a significant high. I mean, I've been talking about that for a while. I think the surge in precious metals, if we see precious metals really scream higher here, and the equities market struggles, I think that's a bearish sign. Now, there's kind of a little bit of a strategy that people keep an eye on, which is the monthly chart of the S&P 500. If it closes positive the January month, then we usually have a positive year for stocks. If we close negative, it's usually going to be a negative year for stocks. So I always like to follow that, and I like to get a gauge of how that goes. January, from a seasonality standpoint, is generally a pretty volatile time in the market. If we look at the seasonality chart, you can see here, January, we usually see the market chop around and it becomes, pretty trendless. And sometimes it can have a little bit of a rally into the end of the year, end of the month. So right now we're in this little bit of a choppy month. People are trying to get a gauge on where is the market going and all of that stuff. A lot of my analysis, as you and I have covered, I believe overall, the majority of stocks in the stock market are showing signs that we're in a stage three. One of the other charts, which I don't think you and I have touched on before, is
Oh,
this
yeah, contrarian chart.
this Benner cycle,
Oh,
right? And
Benner, that's what that is.
so Samuel Benner, he's got these short-term cycles and longer-term cycles. The tech bubble in 2000, we had the 2007 financial crash, the peak there, COVID, 2019, 2020. And the next cycle high is this year, 2026. And it says we should be seeing weakness until 2032.
Oof.
So we're in for, all of my analysis has been pointing to a major cycle coming to an end. The question is, when does it actually stall and roll over? And this Benner cycle, not saying it's going to happen, but it's definitely nice to have to see something confirming that this could be the year that things really turn around. And the whole pop and rally in precious metals, to me, is one of the biggest warning signs.
To wrap up, Chris emphasizes that while the media often cries manipulation during sharp pullbacks, these violent drops are typically just margin requirements forcing over-leveraged traders to liquidate. This is why he favors physical metals over miners. They sit outside the stock market's volatility and serve as a global safe haven as the world's fiat system faces unprecedented pressure. By ignoring the short-term news noise and following the one leg at a time Fibonacci trend, you can ride this historic bull run without getting shaken out before the true peak. Will you be the one holding the ultimate insurance when the equities market finally hits its 2026 cycle limit? Share your thoughts in the comments section below. If you found this breakdown helpful and want to stay ahead of these historic market moves, make sure to like, subscribe, and turn on notifications so you never miss an update. Your support helps the channel grow and keeps you informed when the markets shift next.